Hello, this is Nataraj Upadhyaya. Welcome to a new series of presentations called NU Investment and Trading Approaches. Here, NU stands for Nataraj Upadhyaya. Basically, there has been a lot of inquiry about how do I do the trading and investment. I wanted to answer it in a very structured manner because while I am at my own game, I want to encourage many newcomers to catch up and take the benefit of my experience and sharing. So let us get on with the presentation. Today I'm doing only the introductory session. This is more of a prelude to the specific details we will be discussing in upcoming sessions. So let us get on with the session. First clarity I would like to establish is investing and trading. There are a lot of confusions about these terms. They are used in a very interchangeable way for a reason, because you cannot do investment without a trade, and you cannot do a trade without an investment. They go together. So investing is kind of a potential aspect, and trading is a kinetic aspect. So in an investment, uh, you need to have an investment amount. There is a return and there is a risk associated with that investment. There is a timing period, how long you hold that investment. Then there is a specific return to that investment. Uh, and also it can go through certain risks resulting in a negative return. And return may include dividends if the holding is longer. Whereas trading, there is a buy transaction, then there is a sell transaction. The goal is to buy low and sell high and make a profit. There are trading costs which include various taxes also to the government. Then there is a net gain which can be positive or negative. Negative gain is considered a loss. The holding period could be as small as a minute. It can go for years. So because of the huge variation of the time period, the different types of trading and investments emerge. There can be a margin requirement if trading is done on a margin. Margin is kind of a borrowed money. There will be taxation for the gains that are made through your investment and trading. There can be short-term gain or a long-term gain, and certain transactions can be treated simply as income. For example, options trading. So that is about the how investment and trading go together. Uh, Investment trading is an art to master. See, it is an individual art. You cannot copy someone and try to become successful. And your journey starts from nobody. You don't know anything. You want to make money. That's where you start. So then you become a beginner. You make some, you learn something basic, and you start the journey like a child. So you're like an idiot or a beginner. So your chances of losing money is more here than making money, because you make a lot of mistakes and you become victim of things you don't know. And only after that event happens, oh, you will be wondering what happened. I didn't know about that. So slowly you will learn to survive, which is you at least get to keep your money intact, your capital. You learn to keep it intact. Then you start growing your money. And I think I am at this stage still. So I am not a master. Please note that. So then what happens is, with various techniques and various styles, certain character comes into your trading and investment style, and they have been very proven, and it is something you can do it with the reflex. So you continue to grow with character, then you become a very mature trader. You don't need to, it, it's like a very reflex driving in a highway. You do very well, it should be read as mature trader. Then you become a master. See, master is the one who goes beyond the rules. And it's like there is a statement, no? In a jungle, when the elephant walks, the path gets created. Master is someone like that. He can create a path himself or herself, and So he or she will be beyond the rules of the game. There will be so much mastery. It becomes kind of a easy thing. So one needs knowledge, strategy, tactics, and techniques to master. So is the psychology is very important. Market presence is important. Channels and tools of investment trading also matter. It is an individual journey. Until you are proven as a survivor, go for passive investment through mutual funds. 30 to 50% annual return is coming nowadays from leading mutual funds. So it should be possible to be a passive investor and just make this money through mutual funds. So if you are willing to play the game better, you need to aim the returns at least double that. So ultimately, you should master your dance than copying others. You need to follow what works for you and start stabilizing your game and then start improving it. That authenticity and individuality is very important. So stop listening to what others are doing. You only take the cues and inspirations and integrate into your game. So that is very important. So bottom line is here the focus is the return on investment done through trading. So the time value of money is very important here. Let me elaborate that further. Then you have to manage risks. Whatever you are hoping to make money, but you can also lose money here. So you should aim at least double the return for the risk taken. So to give an example, you are buying a stock, let's say at 100 rupees. So your projection of making at least 20 rupees should be there. Why? It may correct by 10 rupees. So that kind of an analysis and comfort zone you need to have before making an investment. Return on your passion, efforts, and time. So because this passion, efforts, and time can be used elsewhere for better gains. So if you are engaging with all your passion, efforts, and time, there should be an justifiable return. So that should be accounted. And ultimately, you should enjoy it like a game. So it is a game. There is a challenge in the game. There is an effort in the game. The focus is to win. So you want to play to win. To win is to make good returns, mastering the game. So you have to keep learning the game and bring various techniques and become a better player. You maximize good luck and bad luck. See, while there are business as usual days in your trading or investment, there can be incredible luck that can come because of a positive news on a stock what you hold, or there could be a very bad news that can come on a surprise basis. So you are sometimes subjected to good luck, sometimes subjected to bad luck. So you have to break even across those. And if you those who do more homework will attract more good luck. Transformation at different dimensions. So what happens is because of this journey, you started as an idiot, but you will end up becoming a master over a period of couple of years, maybe 5 to 7 years journey. I would say you should take. So your resources will grow, that your wealth will grow, your personality will transform, your sense of purpose will develop, and your purushartha, that is dharma, artha, kama, moksha. In all four dimensions, you will make progressions. So, so with all that, you will have fun all the way while all this happens. So that should be the spirit of this investment and trading game. Let us spend some time on value of the money so that you can appreciate what it takes to be an investor or a trader. Typical recent equity mutual fund returns is 30 to 50% annually in the Indian market. And for a foreseeable future, probably that will continue. Okay. So if you are doing your own investment trading, you should at least aim double this return. Otherwise, there is no point. You would be wasting your time. That means I would say you should aim at least 100% annual return. So what it means at 100% annual return, and let's say you are going into a day trading. In day trading, you need to start being ready at 8:30 because you have to do some homework. Then 3:30 the market close, which is 7 hours. So let's consider it's a full day labor. So day trading, you should make enough for a monthly salary. Okay, so let's say you are a software engineer, you're earning 20 lakhs per annum, and if you have to leave your job and stick to the day trading, you should earn at least 20 lakhs per annum. That should be the expectation. Otherwise, you are better off sticking to your job and just playing the mutual funds, not waste your time otherwise. So 100% annual return means there will be 200 trading days. So approximately you should make 0.5% average return. So assuming that you have an investment of 10 lakhs, that 0.5% day average return means you should make average 5,000 rupees. So that amounts to 10 lakhs per annum. So that is 100% return. So this 5,000 rupees can be achieved from combination of various trading techniques, and that's what I will elaborate in my upcoming sessions. It could be intraday, short-term, swing trading, etc. Daily return is not a fixed amount. Please note that. Some days you may make 20 to 30,000. Some days you may lose 5,000. Very lucky days you may even 60 to 80,000 or 100,000 rupees. Very rarely. So those things can happen. So overall, it should be 0.5% return. That not only ensures your basic salary, it also ensures 100% return. Let us say you are able to reinvest your 100% return. If you are doing this day trading as a full-time job, as an earning mechanism, you won't be able to reinvest all the money because you have to take a salary and spend money. In my case, I'm a retired person. I do have other arrangements for my monthly expenses. So I am focused on reinvestment, and therefore, and I have already achieved 100% annual return ability in the current markets, except for probably last 2 months, I might have struggled a bit. See, I started playing seriously from July 2023. So in the last, let's say, 10 months, I have achieved close to 14 lakhs rupees and on an average of say 12 lakhs investments. So I can say I have made 100% return, and all my returns I have put it in mutual funds just to be safe. And I started with, let's say, average 10 lakhs, and I would say now I'm sitting on 20 lakhs. Okay. So let's say, so I am taking my own example here. This is my dream, you could say. It could be your dream also. How your 10 lakhs can grow after end of the year one, it is 20 lakhs because you are doubling the money every year. So if you take a salary, you can afford to take a salary of 80,000 rupees because you have earned 10,000. But if you don't take, it will be reinvested. So year two, it will double to 40 lakhs. End of year three, it is 80 lakhs. End of year four, 1.6 crores. End of year five, 3.2 crores. End of year six, 6.4 crores. End of year seven, 12.8 crores. I'm a senior citizen. There is no guarantee how long I will live. I have, given an average living of another 5 years. So actually, I am hoping to make another 5 lakhs, so which is very aggressive because uh, just with 100%, I can make only 3.2 crores. So actually, I am actually having achieved 100% annual return. I am actually attempting 200% annual return. I have not been successful so far. Actually, I have lost some money in the last 2 months trying to play aggressively, but I'm very comfortable at 100% return at this stage. I'm not recommending this 200% goal for others. This is just me, and I can afford that, and I don't mind failing. So I have not succeeded in that, but 100% annual return is very easy in the day trading game, is my personal experience. So final points, you have to master your game. The money doesn't fall from the sky otherwise. Listen and listen to and follow the market. Do not dictate to the market. Keep your intelligence aside. Uh, keep your gambling tendencies aside, and keep your analysis also aside. It is only your analysis is only to understand the market. You cannot predict the market. Let the market predict itself. So that difference, moment you start predicting the market, you have started gambling, and your risks will go up and your mistakes will go up. So returns, rather you follow the market and manage your risk with the market. So that we'll see as you go. Returns are based on market conditions too, not just you. For example, you are a very smart trader or an investor. you have done all your homework, but if market conditions are negative and you have, betting positive, you will also lose money. So it is very important to understand the market and go with the market. So you can become aggressive when the market is aggressive, and you have to become defensive when the market is defensive. So this requires you to keep your ego aside and become one with the market. That is an important character you need to learn. In a correction period, returns can be negative to zero. So you can lose all the money you have made. Hopefully, with the India economy growing, the market conditions remain favorable for the foreseeable future. So what it means is the 100% return I made in the last 14 months is not my intelligence or my achievement. It is the benevolence of the market. Always remember that the market gives. It's like, fishing in a pond where the pond is filled with a lot of fish. Fish will come and fall into your trap. So it is not your intelligence. It is the blessing that you had a great pond with a lot of fishes. That is how the market should be perceived. So certain disclaimers so that this presentation in no way misleads you. One may lose all the money in the market. So invest only that you can afford to lose in trading. Let's say the 10 lakhs you invest in initially is something you should be able to lose and still have a good sleep. It should not change your lifestyle because you lost that 10 lakhs. So you cannot borrow that money. It should be something you can afford to lose. Only that kind of money you should invest. And if the market's correct and you lose that money, you cannot sit and cry, because that is the day one assumption that you may end up losing that money. If you leverage, you can lose up to 7 times what you have invested. So let's say you have 10 lakhs investment, and for some reason you leveraged using options or futures or something else, you may lose 70 lakhs. So be careful. So do not leverage unless you have mastered the game. In fact, leveraging is done many times for hedging to protect against the risk. That's the ideal way of leveraging. Failure is as much guaranteed as much success, like in any game. So you have to be very careful. Do not gamble your money, hard-earned money. Let's say you put 10 lakhs and you lose all the 10 lakhs. It may not be a big deal, but it's like starting a business and closing a business. So you should never, start a business with the possibility of closing it. It is kind of a failure. Don't sign up for failure. Plan it very well, play it very well. So that is the preliminary session to prepare you for upcoming sessions. The sessions may have to be conducted during the market hours. Since nowadays markets are a bit slow, it allows me to do that sessions. So please anticipate next session through next week. And I will focus next session on the tools I use for trading, day trading. And this has been only the introductory session. Thank you for listening. You anticipate you to join the session next week. Have a good one.